Hello everybody, welcome to this week's live stream. I'm just making sure that it's all working. I keep an eye on it on a separate screen here as a viewer, and there's always a bit of I think it's like a 20-second lag or something, so I just want to make sure it's all working, then we'll get into it properly. We had the payrolls an hour ago, didn't we? They came in, the US unemployment numbers, they came in better than expected, which was good. Oh, I can see it started now, so it has gone live. So if you're new to this, we do these every Friday normally at 2:30 UK time, and we do a bit of a catch up. Well, first of all, we look at the major announcements for next week, and then we jump onto the platform and take a look at the major markets, so indices, FX, gold, oil, silver, and cryptocurrencies. So we do that. And then I'll go through the questions for any questions that people have on markets they want looking at. So if there's a market you want looking at, put it in the chat, and only put it in once, don't spam it, and I'll get around to them once we look at everything else. Right, let's get going. Let's just do the risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting. And our trading CFDs as provider, you should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, I can see there's a couple of questions about logging on. I can't handle any log on questions. You have to get in touch with support. So I'm sorry, I can't help with that question. Right, let's look at next week. It's been a really busy week this week. We had the, what did we have? The Fed, the US interest rate decision on Wednesday night. We had the UK interest rate decision on Thursday. Both central banks put their rates up as expected. And we've had non-farm payrolls today. So it has been an absolutely news-filled week. It's a bit quieter next week, but there's still some interesting stuff to look at. On Wednesday, clearly inflation is the big topic at the moment, as we know, apart from obviously the Russian invasion of Ukraine. But on Wednesday, we've got Chinese inflation data and US inflation data. I think US inflation data is forecast to show 6% inflation. It looks back over the last 12 months. Let's see. You can see a lot of volatility off the back of that. And next Thursday, we've got UK GDP. So how well or not is the UK economy doing? The US economy had a negative quarter last time round. The UK hasn't had one yet, so we'll see. We'll see what happens. So that's next week's data. Breaking news alert there from the BBC. Quick update on the contacts. To obviously do this with Capital.com. Go to Capital.com to find out more. Download the app, open an account, open a demo account, all of that sort of stuff. Any questions after this, drop me an email, david.jones@capital.com. Any questions about trading? Again, for support questions, how do you log into your account? Contact support, because I would not be able to help with that. Twitter, you can follow me on Twitter, @JonesTheMarkets, and jonesthemarkets.com to find out about my trading approach and the training course I run. Follow Capital.com on YouTube, Twitter, and Facebook. Right, let's get into it. I did see a question that caught my eye. Where is it? Do you feel the current environment is as uncertain as during the 2008 financial crisis? I really do. I think it is very difficult, all right, for me anyway, to see where the rest of this year goes, particularly from a stock market's point of view. Because if we forgot about trading for a second and talked about investing, we haven't had this sort of backdrop for 40 years, have we? And there is, I think, so much unknown about how long inflation is going to stay around for. Is the action of central banks actually going to combat inflation? Are we going to be this time next year with high inflation as well? So I think from an investing point of view, it is very difficult to know what the rest of this year brings, which makes it interesting. But I think it's the hardest time, well, it is for me as an investor, I think, as you would say, going back to the financial crisis, because we've been spoiled, haven't we? If we look at, here's the S&P. I was going to start off looking at the S&P. I mean, we've only got data going back to 2016, but there you go. The last 6 years for the S&P, the market, I mean, we had clearly the Corona sell-off, but the market was broadly going up. And dips, people were rewarded for buying the dips. And the question is, the current dip, if we want to call it a dip, that we've been in since January, is this a buying opportunity, or actually is it just the start of a bear market? And that's what that's why I thought I'd start off with this now. You can see we had those payrolls out an hour ago, so we'd have had some volatility. There's the numbers coming out, the US unemployment numbers. Had some volatility and the market's dumped, and you often see that I've just seen someone's put in, what's your view on the Japanese yen as a safe haven currency? I would say it's anything but that at the moment, but we'll come to that when we take a look at the foreign exchange markets. If you look at the US dollar, it's at a 20-year high, isn't it? But anyway, here we are on the S&P. We'll have a look at FX in a minute. And it's weak again. US markets have just opened. It's weak again. For me, as I've said in recent weeks, the big level to watch was the low from the Russian invasion day, 24th of Feb. And we saw markets or stock markets make a low on that day. And we haven't really touched that low since then. And I did wonder, are we going to have a bit more of a recovery now? And I thought, well, we're going to have the buyers come back in. But we haven't. So where we are now, we are right bang back on that low from Feb. And I think maybe we're in for an interesting day. I do think if this low goes, I do think the risk is we could see a much more protracted sell-off from stock markets than even what we've seen already. And what we've seen already, the S&P at the end of last year was, let's say it was 4,800. Currently the market's down 700 points from that. So that's what? Not quite 15% down, 14% down for the year to date, with me doing the maths in my head. So, it's pretty negative. And I think if this level gets broken, and we start trading, let's say, it made a low earlier this week at 40.60. I think if 40.60 gets broken, I think the risk is that perhaps we're going to see what we've had so far this year, carry on for the next few months as well. So interesting market, but a really weak start today. Let's have a look at the NASDAQ. The NASDAQ 100. Same thing, of course. NASDAQ is... So even as we speak, the NASDAQ is making new lows for the year. So the NASDAQ is now at 12.6, which puts it its lowest since, March. March last year. So what's that? 14-month low for the NASDAQ at the moment. So the NASDAQ is breaking down. This doesn't look positive, any of this stuff at the moment. Let's see what happens today. Let's see. Do we get a bit of 2 and 4th, struggling to hold on to these levels, or do we see quite a bearish finish for the day? So it'll be an interesting session today. I suppose if you wanted to be really aggressive, you could be a buyer. I wouldn't be a buyer yet because the thing is still going down. But you can see it's breaking some big levels, so that is not a good sign. So I think we could be in for a volatile session today. But the stock market's not looking healthy at the end of the week. Ftse, same for the Ftse. The Ftse had held up quite well. Still up. Is it still up for the year? Let me just have a quick... The Ftse is now... Okay, it's trading pretty much where it ended 2021. So the Ftse has more... So this is the UK stock market, obviously, has more defensive type stocks in there. But even the Ftse getting hit over the last couple of days. And again, I think if we do see US stock markets sell off, the risk is, of course, the FTSE is going to get dragged lower as well. So let's see what happens there. The Nikkei, I've still got this short running on the Nikkei. I think we did that in a live stream, didn't we? So that's short from 27,300. So I'm short from wherever it is, back here somewhere. The Nikkei, it has held up a lot better over the last couple of days than these other markets that we've looked at. But the trend is still down since September of last year, September 2021. So yeah, still looking pretty weak to me. And again, I think if we saw maybe the dollar's strength against the yen has helped the Nikkei hold up, but still in a downtrend, still looking weak. So let's see what happens when it comes to stock markets, but not looking too clever at the moment. What should we look at next? Let's take a look at, let's do some currency markets. We'll start off with my favourite market, and I always say it, the dollar index. I actually came out of a trade I'd had for a while. I said that if a market goes in my favour, I'm quite happy to run the position. And I've been in the latest dollar index trade since about here somewhere, because the trend is up. I did get stopped out for a profit on that sell-off the other day. I've got an order in to buy if it breaks 104. So if it does go surging higher, I'll buy back in again. If it sells off, I'll be a buyer. But regardless, if we take a step out, the dollar index did briefly trade, I think, to a 20-year high this week. The trend is still up, off the lows from a year ago. This trend is still up. That trend line coming in at 97. I think it is overextended. We can see the moves in the dollar since Feb of this year are overextended from that longer term trend line. Normally it's fairly close to that trend line. Clearly it's accelerated away. So I think perhaps in the short term, the risk is the US dollar is a bit overextended up here, but I'd still be looking to be a buyer. So I'd be a buyer on a dip. I'd quite like to have a good dip here. Even if we come back to 98, the trend is still up. And 98 is only where it was about 5 weeks ago. So again, it has accelerated away over these last couple of weeks. Let's see what happens to the dollar index, but still pretty strong. Let's take a look at dollar yen, because someone mentioned dollar yen. And then we'll have a look at the pound, and we'll have a look at the euro. Dollar yen, again, so someone said, do you think that the yen is a safe haven? Well, I would say no, because the yen has been absolutely mullered over the last couple of months. It's gone from 115, a dollar has gone from 115 to 130 against the yen. So that is a 13%, 14% rise in the dollar's value against the yen. Again, the big trend for dollar yen is still up. So again, I would not personally be looking to sell short. I'd be looking to be a buyer on dips. And you can't see it on this chart. Let me just bring it up on another chart, because I think that is earlier this week, that was a 20-year high for the dollar against the Japanese yen. Let's have a quick look. Here we go. So if I take that all the way out, so the dollar, there we go. So back to levels not seen since 2002, dollar yen. So again, arguably, it's a bit overextended, you could say, up here. Let's see. I suppose if you really wanted to go short the dollar and long the yen, if I had to do that trade now, I'd be a seller now, but I'd put my stop loss above that most recent high. That most recent high is 131.25. And again, I think the risk is if that breaks, then it goes higher. But it is overextended. We do have some, bearish divergence on the RSI, where the market's pushed higher, but the RSI hasn't followed up. So that again suggests that perhaps it's a bit overextended up here. But there we go. That's the dollar yen. Let's take a look at the pound against the dollar. So the UK raised rates the other day. Didn't have that much of an impact, to be honest. It was expected. When these things are expected, clearly there's no shock, is there, for the market? So the rate rise was yesterday, 12 o'clock yesterday, and the market had already, just fell off a cliff. So, and here we are, pound against the dollar, trading at its worst levels since here, July 2020. So it's June 2020. So it's a 23-month, 22-month low for pound against dollar. I am surprised. I did think we'd see a bit of pound strength coming in. We do not have it. The last video we did on the pound was only last week, I think. And I put an order in to sell at 126, and it got filled, and it's done really well. So that trade would have been for £250 risk. And so we got filled on the 29th of April. So it's up £380 so far, that trade. And when I've had a few questions via email about questions about trading. So I'll drop some things in during this live session. But that trade, I felt really uncomfortable leaving that order to sell at 126 because I thought if it gets up there, it might just blast through the level. And it was the 29th of April. So it was filled here, just here, just on that move up there. That's where that order got filled. And it is often the uncomfortable trades end up being the better trades. Sometimes if it looks too obvious, it doesn't work out that well. But I think I did the video about here and left an order at 126. So that trade has worked well. There was a similar one I did on natural gas when we come to natural gas in a second. But for me, pound against the dollar, it's still weak. The trend is still down. Now, even if the market rallies 1,000 points from here, that downtrend since May of last year is still very much in place. So it's really weak. And this is all, of course, to do with the dollar strength. Okay. Similar story with the euro against the US dollar. I was Googling this week. I was trying to find out, when the next ECB, European Central Bank meeting is. And it's not till June. They're not even having one in May. Because we had clearly the UK and America this week. But it's not for another month. And there is a feeling that the ECB, they have been reluctant to raise rates because they're really worried about the impact on the European economy. And I think they are, you could say, arguably even more behind the curve on this than the UK and the US have been. Anyway, we've seen a bit of stability for the euro over the last week, down at 105. That is still the lowest it's been since March 2017. So what's that? 5 years, 5-year low for the euro this week. And although that trend is still down, absolutely that trend is still down, I do wonder, and I wouldn't trade it, but I do wonder, will we see a bit of a bounce for the euro from here, just if the dollar starts to give up some of that recent strength? Could we see a bit of a bounce for the euro? But if we did see a bounce, even if we got back to 110, I think it'd be interesting, which is 450 points higher than where we are now. I think that'd be an interesting opportunity for a short in euro. So I do think, even though the trend is down, and if you watch this channel, big fan of following trends, wouldn't go against a big trend, but I do wonder, is it a bit overextended in the short term? Let's see what happens. Gold, right, let's do gold. I think this is an interesting market at the moment, and I know I very rarely say that about gold, because I do wonder, it's a poor performer last year, down 3.5% last year, the price of gold. Really bad year for gold in comparison to everything else that went up. And then we had a bit of a run, obviously off the back of the Russian invasion and everything else. But it couldn't break through the old highs, these old highs from August 2020. And I thought, well, we've got inflation, we've got nervous stock markets, we've got a war in Europe, and gold can't break out to fresh all-time highs. That's not a good sign. But I do wonder, with it getting knocked back to where we are now, is it a trade? And I think I'll do this trade now, actually, because I think it's a reasonable trade. I haven't got a position on for gold in my own account, and it's also one I was thinking about doing next week for myself. But I think with gold, it's been knocked back. It was at $2,000 only a couple of weeks ago. It's been knocked back this week to $1,850. But we're still in this trend from gold off the August lows, August last year. It also went oversold. The first time we've been oversold since November. So it's the first oversold signal on the 10-day RSI since November. So it looks obvious. So it obviously means this trade isn't going to work out. But I think it's an interesting trade down here to look for a bounce next week. So let's buy it. Let's buy gold. So I normally risk £100 on these trades. So what was the low? The low was 1850 this week. There's a bit of a level, 1840. I'm going to go 1825, right? So I'm going to put a stop in at 1825. Normally risk 100 quid. So if I do if I buy 2.2 ounces, where it's trading now, 1882 or thereabouts, 2.2 with a stop at 1825. And I'm just really wondering, is this trend going to resume and we're going to have another push back up to 2000? That's my thinking behind this trade. So let's do it. Let's buy it. There we go. So bought 2.2 gold at 1882 48. Let's see how that works out as a trade. And I'm quite happy to run that and see what happens. I should say actually the trading account. So for those of you who've been watching this a while, you know this, but when we first started doing YouTube videos 2.5 years ago, we started off with a trading account, a real account with £10,000 in. It crossed £20,000 this week for the first time. So it's time. I'm going to up the risk next week on the videos we do next week. I'll only up the risk to £300 a trade. So we'll be risk losing 1.5% of the trade. But it's a bit of a milestone this week for this account for the YouTube videos. So it's taken 2.5 years to double the money, but I'd be quite happy if I could double my money every 2.5 years. So that's that. That's the gold trade on. I think that's interesting. Perhaps there's a chance for a bounce next week. Let's look at silver, which is genuinely the market I hate. Silver, but just boring. I mean, it is. We're stuck in this range. We've been in now since July of 2020. Arguably, though, down here it's a trade. For me, gold is the better trade because the trend since August on gold is still up. On silver, it's still a bit sideways. But if silver is going to bounce from anywhere, then this is the level. We've seen silver, going back ages, $21.50 has been the floor for silver. Let's see what happens. It's going to be interesting if it starts breaking 21.5 next week, and we see silver start a slide maybe. But for now, I think it's an interesting one down here at 21.5. It's trading at 22.40. Let's see if 21.5 holds. Let's see what happens. All right, that's silver and gold done. Let's do oil. Then we'll do natural gas, which is just nuts. Natural gas. So oil. I do think, I've said this a bit, I think this is a boring market now, relatively speaking, relative to what we had in the first 3 months of the year. So for me, I would expect oil to just flip-flop around $100. That's what I think. I don't think we'll see those highs at 125, 126 challenged anytime soon. So I just think just flip-flop, flip-flop. So there will be opportunities, I think, but not the same sort of fantastic run that we had from December, into March, where what did the price do? It went up, well, it nearly doubled pretty much. It went from 65 to 126. So that was a massive run. I just think that perhaps oil will just be perhaps just something of a noisy market with no real direction. Arguably going short up here because we're at the top of the recent range over the last couple of months or so. So an aggressive trade. Let's do that trade actually. It's not as good as the gold trade, but let's do the trade. We'll short sell oil. So the market touched 110 yesterday. I'll go 112 for a stop. So we'll put a stop in at 112. So I just think that oil has perhaps bumped up to the top of the range again, and perhaps it will come off a bit. Let's see what happens. So I'm going to sell oil. So I'm going to sell 30 barrels where it's trading now. Stop loss at 112. So if it breaks out again, I'll take the loss and a risk of 100 quid. Let's sell it. There we go. So we go short oil at 107.84. Let's see how that works out. And really just again, assuming that we've reached the top of the range and perhaps we can have a flip back down towards $100. Let's see. But overall, I don't think it's an interesting market at the moment, oil. I think we're just sort of flip-flopping around. Natural gas. We've got a couple of trades in natural gas. So this is the one I did the last time that we did a video in April, the 20th of April, for natural gas. And I bought, and I wasn't convinced of the trade, but it's made 300 quid, so it's done well for a risk of 250. We put another video out yesterday on natural gas, and I left an order to buy if it broke out. It did break out. It's only been a short break so far, but I bought it yesterday at 880, and that's down £50 at the moment, natural gas. So let's see. I mean, it has been. I've seen a couple of comments in the chat about going short natural gas. I said in yesterday's video, I've spoken to quite a few people who've been going short into this, and a few people going short with no stops into this, which is absolutely ludicrous. I mean, I do think anybody who trades without stop losses is just a gambler, to be honest. And clearly we've seen this market, from the Feb lows double into April, massively overextended where it is now. The long-term trend though is still up. So for me personally, I would not be looking to go short. I'd much rather buy a dip. If you absolutely really wanted to go short, okay, but make sure you use a stop loss, because clearly once it starts moving, it can really move. For me, if I had to have a stop loss, if I had to go short now, I would put a stop loss. It's traded above 9 today. I would put a stop loss to the other side of 9. But I think, people love markets like this because you think, well, it's gone up so high, how much higher can it go? And of course, it just goes higher and higher. And they just get clobbered by not managing their risk properly. Anyway, it's interesting up here that I did a more in-depth video on it yesterday. There is bearish divergence on natural gas at the moment. So there was the high there and the market pushed higher and we've got a lower high. So again, that suggests that perhaps it's a little bit overextended in the short term, the price of natural gas. Let's see what happens. But I'd much rather be a buyer on dips than trying to pick a top in natural gas at the moment. Let's see what happens there. So we've done that. Bitcoin and Ethereum. I think I came out of my Bitcoin trade at break even in the end. I thought it was going to get a bit of a move on. I mean, not necessarily go crazy up to 70,000 again, but I did think we'd had this recovery off the January lows. I bought in at 39,000 in here somewhere. It did go up to 47. I moved my stop and got stopped out at break even, so it was all a bit boring in the end. It's pretty weak. I mean, I think again, it's still interesting next week, because I think the test for Bitcoin, is it going to hold above the low for the year? So the low for the year is about 33,000 from January. Let's see what happens. I mean, there's a lot of support from 28 to 33,000, but clearly so much momentum has left this market in the last 6 months. So let's see what happens. So that's what I would be watching next week on Bitcoin. Does that old support hold? 28 to 32. Imagine if it broke 28,000. All the hodlers would be mortified if that happens. Let's see what happens. But looking to see if it can bounce from here. Ethereum, I'm guessing it's going to look the same. Oh, hang on, my mouse has gone a bit funny. Sorry, my mouse suddenly decided to go into reverse. Hang on a sec, there we go. So Ethereum, the same thing. It's right on that trend line now, that recovery from January. Again, if it starts breaking much lower, I'd be watching these old support, 2150. Does it hold the price up? Let's see what happens with that. That's it. Have we done everything? I think we've done all the markets, haven't we? So markets I would watch. So for me, stock markets, I've just seen somebody say, are you bullish or bearish on the US? I think at the moment, I am still quite happy to stand aside. When these markets are breaking down like this, look at this S&P, the daily chart breaking down. Still, pretty weak, these markets, really weak. I'm quite happy to stand aside and see what happens. I think it's much harder to call it at the moment than it has been at any point for a few years, at least since these lows 2 years ago in March. So March 2020. And here we are, we're almost on new lows for the year now for the S&P. The NASDAQ is on new lows for the year. So I think it's a difficult market. You could just go short. If you think, well, that's it, the market is going into a bear market, could go short. If I was going short here, based off the daily chart, I would want my stop the closest absolutely above these highs at 4,300. So again, it's a 200 and something point stop loss. But look at the swings over just the last couple of days. Seeing big swings in these markets. So looking a little bit vulnerable, I think, down here. Let's see. But I think it's going to be an interesting day for stock markets. And gold, obviously, because I did that. I think gold's an interesting market next week. See what happens. Do we see this trend reassert itself and away it goes? And the other one is just the dollar. Because it's all about inflation. At the moment, the dollar index, I've said, is the market that I watch because I think it's an interesting market. It is a bit overextended up here. We've got US inflation numbers out this next week, so I would expect some volatility in that market. But for me, I'd absolutely be a buyer of dips for that market. Let's see what happens. Right, so I'm going to jump into the questions. So just a quick reminder of the contacts: Capital.com to open an account, open a demo account. David.jones@Capital.com if you have any questions. @Jones the Markets on Twitter, and follow us on YouTube, Twitter, and Facebook. Right, let's just jump into the questions. We looked at all of those. What FX markets do you watch? The main one I watch, like I say every week, is that dollar index. So I watch that, and that's the one I look at every day. And also, I look at pound against the dollar, euro dollar, and dollar yen. So I don't look at millions of FX markets. So Costco, let me look at Costco. It had done well, hadn't it? I was looking to see what things do well in a recession, and consumer staples is a sector that does well in a recession. And I suppose you could say that about Costco, couldn't you? That it's what is it, a wholesaler, isn't it? I mean, it had been doing really well until only the last week or so, last couple of weeks. I would be a buyer on the dip. When it stops going down, assuming it does stop going down, I'd be looking to be a buyer. And there's a load of support coming in about 470. So I would be a buyer with a stop the other side of 470 on Costco. That the trend is up. It is falling through that trend line today, but we saw multi-year high, maybe all-time highs for Costco just in April. So I would be looking for it to stop sliding and look to be a buyer on Costco. Yen against the Chinese yuan. I can never say that properly. Japanese yen, CNH. That's another breaking news. Oh, royal family breaking news. Oh, we haven't got it. We haven't got that one. Japanese yen. Is it the other way around? Hang on a second. CHN. Oh, yes, we have. There we go. Let's have a look. Okay. So this is actually the other way around to what you requested. So this is the Chinese currency against the yen. Weird old trend, but I mean, the trend is up, clearly, isn't it? So over the years, we've seen the Chinese currency appreciate against the Japanese yen. It's come off a bit, hasn't it, over the last couple of weeks. For me, again, because that big trend is up, I'd be a buyer. It's not a market that I would probably trade, to be honest, but 19's been a big level, hasn't it? So maybe it'd be interesting to see what happens next week. Does it sell off a bit next week and we have a bit of stability coming in? So for me, I'd be looking to be a buyer with a stop the other side of 19. So yeah, but over the years, clearly big uptrend in that one. Wheat, I don't think we do. Do we do wheat? Hang on a second, let me have a look. I mean, clearly wheat has had a bit of a lift, well, quite a lift because so much wheat comes from Ukraine, for example. I'm just trying to see, but I've been watching this. We haven't got it on our platform yet. I've been watching it because I have traded it in the past, and again, clearly it went crazy on the invasion. Price of wheat went from 800 to 1300, so it moved 50% higher. And I just wonder, as with oil, is it all a bit sideways now? So I think perhaps we could just see a lot of noise, but no real direction for wheat. But again, I'd want to be a buyer of dips on wheat. What was the other one? Aluminium, because that had a good run, hadn't it? Aluminium. Oh, interesting. It's a lot of these commodities have been hit quite a lot in the last couple of months, and clearly this is good from an inflation point of view. That we'll have a look at copper, I'm sure, that a lot of these commodities are taking quite a hit. I mean, aluminium is down 30% since the March highs. So, the cost of raw materials, some raw materials at least, has been dropping. For me, I would still be leaning to be a buyer. I'd still argue the trend is up, even though it has, again, today it's sliding below that trend line. But I'd rather sit on my hands and see, right, do we get some stability? We've got big old support coming in at 2,500 area, so only 10% below where we are now. The thing has dropped 30% in the last couple of months. I think it's an interesting market to watch. I still think we'll get another rally in aluminium but I wouldn't be a buyer yet. I want to see a bit of stability come into this market. Cotton, someone's asked for. I do have a trade on cotton. I think I said that last week, actually. I've got a trade on cotton with quite a wide stop. So I'm long. It's being hit again today, doesn't it? The trend, big trend is up. Another example, actually, is another example of a commodity coming off over the last couple of days. So for me, I'd still be looking to be a buyer. I wouldn't be a buyer today. Interesting to see what happens if it gets knocked back to 130. So a lot of these overstretched commodities, which carried on being overstretched over the last 4 months, are giving some of that back over the last couple of weeks, last few days. So for me, a bit weak at the moment, but I'd still be looking personally to be a buyer, and I'm long anyway. So I've got clearly maybe a bit of unconscious bias there on cotton. Why don't you trade options and futures? I do trade options and futures. We don't offer options in our trading platform, so that's why I don't talk about options. Again, I think options, a big thing in America, obviously, because they don't have the same access to leverage trading that we do in a lot of the world. Options are so many different ways to lose your money with options, but we don't talk about it in these because we don't actually offer options. We did the yen, Alibaba. Let's have a look at that now. Alibaba was, from memory, an absolutely great downtrend, and it still is. Look at that. It's almost textbook, the Alibaba downtrend. So it's been going since October 2020. So we're 18 months into that. For me, I would still be looking to sell on strength. I wouldn't be thinking about being a buyer, but as the low is, what's the low? 72 so far. So for me, yeah, what you're saying, 50 to 60 for support. I mean, it's a big level. I mean, these 60 are the lows from 2016, aren't they? So that's a 6-year low. So it'd be interesting what happens when it gets down there, if it gets down there. But that trend, absolutely, still definitely down. Someone saying inflation has been baked into the cake for the past decade. In the absence of a severe depression, it ain't going to go away. Wow, let's see what happens. Before the war, oil was all oil again. Now they're together up and down. Well, the natural gas has gone up because one of the things, clearly the war and Europe saying it's going to turn away from Russian natural gas. So the natural gas that we trade on here is US natural gas. So that has got a boost of that. So that's why we're seeing, we saw oil hit its highs in March and we saw natural gas hit its highs today so far. So there has been a bit of a lag there because of what's been going on politically and geopolitically. Twitter. I think Twitter's an odd one at the moment, isn't it? Because of the Musk bid. I think I did say the last time we did a video on Twitter, I did go short. It was here. It was after the news came out of Musk making a bid. For me, I'd probably still rather go short on the risk of a deal not happening. I suppose if you thought a deal was going to happen, I've not been keeping up with it, but 54.20 is the offer price, isn't it? So if you thought there was a deal going to happen, there's $4 and a bit upside from here. But the fact that it's not trading at near 54 does suggest the market thinks there's still a bit of a risk for Twitter. So yeah, there we go. So there's not too much to say about Twitter at the moment. Amazon, I think I do have a short on Amazon. It's done really well, this short. So I've been short Amazon since the 7th of February. We must have done a video on it back then. Went short at 31.59 and here they are at 22.86. So a lot of these retailers have been hit. And I think and it's fair enough, because the cost of living, wherever, I don't know, wherever you're watching in the world, but clearly here in the UK, energy prices, domestic heating has gone up. We're not going to feel it so much yet because we're in spring, summer. But I do think as the year goes on and we get into winter and everything else, if energy prices are still where they are, people are going to feel the pinch even more than they are at the moment. There's Amazon. So, the trend has been down since November last year. Arguably, big level of support coming up at 2,200. So maybe we get a bit of a bounce in Amazon, but for me, that trend is still down, and it's still looking pretty weak to me, Amazon. So I would have no interest in being a buyer just yet. and happy to stick with the short. Where's the stop on the short? 24.50. Okay, that's fair enough. So if it does blip up from here, I'll come out for a bit of a profit, but still looks weak. Can we move stop loss and check all open positions, or do you just ignore it? I've been trying to pay a bit more attention to the stop losses here because I often end up giving back loads of profit. ARK's a good one. We did ARK in a live stream, didn't we, for 100 quid risk, and that's up 200 quid at the moment. Let's take a quick look at ARK, which of course is Cathy Wood's ETF. Absolute darling of stock market investors on the way up, and an absolute nightmare over the last 12, 15 months. So with short ARK, it's at 44 at the moment. Where's the stop? Maybe put the stop at 50 or something if it's not there already. Yeah, the stop's at 50, so I leave it there. Do you have any rules of number of trades per day and how long to wait after a losing trade? No, I don't really. I don't. In my own trading, I tend to run trades. I look at daily charts. I don't look at 5-minute or hourly charts, and I tend to run them if they're going the right way for days and weeks. If I have a losing trade, which obviously I do, I don't think, I can't do another trade for X number of days. I don't think that at all. So for me, no, I'm fairly. I don't trade that often. I do. In a busy month, I don't know. I might do 10 trades based on daily charts in a busy month. So I'm not like buy, sell, buy, sell, buy, sell. So my trading style is not that dissimilar to the trading style on the videos, where we do all those pre-recorded videos. It's looking at the dailies, looking for a level, looking at where to place the stop, all of that. So it's not, I trade a lot more markets than we look at on our YouTube channel. For example, the dollar index it's great. Dollar index has been a brilliant market for a trend trader over the last year, definitely. But whenever historically we do a dollar index video on our YouTube channel, hardly anybody watches it. So we stopped doing them, because we want to put stuff that people are going to watch. So there's a whole load of markets out there that aren't popular but are great markets to trade. So my approach is very similar, but I look at different markets to what we look at on the YouTube channel. We looked at gold, copper. Let's look at copper. This has been disappointing, hasn't it? And we looked at these last week, and it's not moved that much since last week. I still think it's a bit of a last chance saloon trade, copper. It's fallen out of the uptrend, but there's loads of support from 4.1 through to 4.2. So maybe if it's going to bounce from anywhere, I think we're close. But it is this bigger theme of some of these commodities coming off over the last few weeks, and copper is seen very much as a barometer for the world economy. And if we did see, a recession, global recession perhaps, as the year goes on, less stuff getting made, then copper is going to be less in demand. So maybe we're seeing that going in at the moment. So maybe a bit of a bounce for copper, but it needs to get a move on. So someone's asked about coffee. Coffee, again, is an existing trade I've got going. It's not doing much at the moment. For me, the trend for coffee is still up, but again, like everything else, other commodities, it's come off a bit. Again, I'd be personally looking to be a buyer because the trend is up. 2 was pretty good support back in October for coffee. It's trading at 212 at the moment, so another interesting market to watch for a bounce maybe from here. Any chance Aussie dollar? Do you know, Aussie dollar is another one I was watching. Aussie dollar. I was wondering, because the Aussies put up their interest rates this week, didn't they? I was wondering, are we going to get a bounce for the Australian dollar next week? So this is one I'm watching actually, because it had a right run up on the interest rate decision and the slightly weaker US dollar, and it's coming. You can see these are daily candles again. It's come all the way back down, but it's a big level for the Aussie, down at 70, and we're trading at 70.89. So for me, that is an interesting market to watch next week, because this has been, going back to a bit like silver, going back to September 2020. This has been a big floor for the Aussie dollar down here. It stopped any weakness. So what happens? Let's see what happens. But I think that's an interesting market to watch next week, the Aussie dollar. Platinum. I think platinum, I think the trend is still just about up, platinum. And again, it's sort of, well, it's not actually up. Ignore that. It is on this big level, the lows since September at 890. And I'm long platinum. I think I said before I've got an open position of platinum. 890 is a big level. Can it get a rally on from here? Let's see. Let's see what happens. But again, another example where a lot of the momentum has left this commodity market in recent weeks, recent months even. So maybe we are seeing the start of commodities starting to roll over. Let's see. Let's see what happens. Can we look at uranium? I don't think we have uranium. We get asked that a couple of times, and I don't think we've got it. Is it that one? I don't know if that's the right one. So I can't really help with that, sorry. How much time have we got left? Okay, look. Can we have a look at Shop? Yeah, Shopify. I think, I'm going to guess that's been hit on the threat of consumers not spending any money. And it has. Oh, dear me, that is pretty drastic, isn't it? So that's gone from $1,700 to $370. So it's dropped, what's that? It's more than 70% since November of last year. And I'm guessing it's because of the concerns about people spending less money, the trend absolutely completely down on that. You know, these old lows from the coronavirus lows back in March, around $300, March 2020. So again, I think another interesting one to watch next week, see what happens, but still weak. You know, that trend absolutely still down on that one. What do you think about penny stocks? Good question. I think people love penny stocks because they're so cheap, and they think, well, if this stock is trading at 15 pence if you're in the UK, or 60 cents, whatever, if you're in the US, I think, what happens if it does an Apple and it goes to $100 or 15 quid a share? So people love penny stocks because they're so cheap and they can buy so many. But penny stocks are penny stocks for a reason, and the reason is that they're not very good. They've underperformed. There was one, I'm trying to think. I mean, Aston Martin is one. It's not a penny stock anymore because they consolidated all the shares. What's the other one? I can't think of one off the top of my head. But is Petrofac still a penny stock? No, it's a little bit higher. But it is these sort of tiny stocks, and people like them. Potentially they might go up a lot, but they're normally penny stocks for a reason. So for me, I've got very little interest in penny stocks, to be perfectly honest with you, because their longer term charts can often look a bit like that. But if you buy something for 10p and you make millions, good luck to you. Well done. What is your opinion on the Federal Reserve not raising interest rates more than 0.5%? Well, I think that central banks are scared, aren't they? It's a balancing act at the moment to actually try and combat inflation, but not throttle the economy. And I think, you know, with hindsight's perfect, isn't it? If they just all started a bit earlier last year, then maybe we wouldn't be in the sort of inflation squeeze we're in now. So they're going to have to be, you know, more aggressive. I'm sure I read something a month ago that there's 2 more 0.5% rises to come at least in the next 2 months. Let's see how it pans out. But I think there is this feeling that they're all a bit behind the curve. The trading platform is Capital.com, obviously. You see up there. There we go, top left, Capital.com. Disney. Let's have a look at. I think I've got a trade on Disney. Disney. There we go. From the 11th of February, short Disney from 153, and the stock is 109. Probably need to move the stop on that as well. Let's have a look at Disney. Disney. Still pretty weak, isn't it? So we did the trade in Feb, up here somewhere, 153. Pretty good trade in the end because it came back to the downtrend line. So for me, still weak. You know, we've got support coming up around $100. Let's see what happens. Where should we put the stop? 120, but still weak to me, which is, you know, not surprising. I mean, everything is pretty weak still at the moment, isn't it? And that one's still weak. Would it make sense to watch the Ukraine situation? Clearly, what's going on in Ukraine is still going on. I don't think it's affecting the market so much, though, at the moment. I think if there was, either an escalation in hostilities, which clearly nobody wants, or some sort of peace agreement, we'd see a significant market reaction one way or the other. At the moment, it feels like what's going on has already been factored into the market. So I don't know how much you could gain. I couldn't gain anything personally from watching it. But I think if there was a change somehow in the hostility level, then maybe we'd see that impact markets. What do you think about sugar? Sugar, I'm sure I've said this before, over the years I was really surprised by. Sugar has been my best performing market over the last 3 years in terms of markets that have delivered profits, and I would never have guessed that. I did some analysis about a couple of months ago, and again because the trend has been up. So again, for me, I'd be a buyer of sugar. There's an argument to be a buyer now of sugar with a stop. This is UK sugar that we trade. There's US sugar you can trade as well. So for me, it could be a buyer now. Let's do a trade. Let's do another trade. Be a buyer now with a stop at 510. So it's quite an aggressive stop. I'll stop at 500. Let's do that. So what did I say? 500 for a stop. How many can I buy? Six, whatever they are. £6. £6 of sugar at 522. Stop at 500. About 100 or so risk. Let's buy it. I think it's interesting because the trend is up. The big trend is up. And this is like a multi-year high in the middle of April. It's backed off. Is it going to hold above 500? That for 510. That for me is the trade at the moment. Even if it sold off, I think it's interesting down here at 480. So again, for me, the trend on sugar is up. What about Nvidia? What about Nvidia? Right on the trend line, Nvidia. An aggressive trade would be to be a buyer now with a stop under 175, I think. It's an interesting one, isn't it? It's had a great trend, again, of course, since the coronavirus lows. Come back to the trend line. Bit weak still. Perhaps for one, it's one to be patient and wait to see what happens next week on Nvidia, see what happens. But I think it's 180, 175 has been an interesting level. Let's see what happens. Do you think it's wise to be heavily long on gold, happy to hold for 5 years plus? I don't know. I don't think personally for me, no. I think gold, the trend for gold is up undoubtedly. So for me, we did the trade today on gold, so I'm definitely a buyer of gold on dips. When you say heavily long, would I want 50% of my investments in gold? No, for me. Although saying that, we did a video with Peter Schiff the other month, and it's on the channel. There's a debate video, and he reckons gold's going to go up tenfold in the next 5 years because the dollar is going to completely crash. For me, that's a bit too pessimistic. So I'm happy to trade it, but it's not a pile in and remortgage the house trade. Let's see what happens. Netflix, poor old Netflix. God, it's still going down. Incredible. It's still going down, isn't it? We are now at the 2017 levels for Netflix. I would have thought it would have stabilised by now, but clearly, with the whole market looking really nervous anyway, Netflix is still getting hit. So for me, if you're short, it's great, isn't it? If you're short Netflix, just clocking up profits every day. So for me, it'd still be looking for opportunities to go short. Would not be a buyer just yet. Team Viewer stock. I don't think we've ever looked at those. Let's have a look at those. Team Viewer AG. Oh dear. It's another one, isn't it? That's just, it's really bombed out, isn't it? So that's gone from $55 July 2020 to 12. No, it's not even dollars. I think it's in euros, isn't it? If it's AG, down to 12. So for me, again, it's another. It's a bombed out stock. So if you really want to have potential recovery trade on it, I would want my stop loss the other side of these 10.60 euro lows. So if you think actually it's been overdone, but for me it still looks to be too much of a downtrend for me. So let's see. Everything looks really pessimistic at the moment, isn't it? We didn't. Unless the Lyft. Let's have a look at Lyft, the taxi company. They had a massive hit this week, didn't they? I can't remember what it was. again, since it IPO'd, it's never traded as high as its IPO price. It's interesting, isn't it? So it's about $85 on IPO, and since 2021, it's just been sliding and absolutely hit again today. God, it's a really gloomy live stream today. Everything is just going down the toilet at the moment. So for me, the trend is still down. We broke through that old low from October 2020. The absolute low since IPO is about $14. So for me, watch it and see. But that you can see how clear that big trend was. Great selling opportunity there. Textbook sell up at $56. But yeah, the trend is still down, isn't it? So it doesn't look too clever. Facebook, so look at Facebook. So Facebook, or Meta, of course, as they are known now with their ridiculous metaverse. I've got a trade on this, I have to remember it, hang on. Meta platform, so bought them on the 22nd of April. That must have been in a live stream. That's made money, that's good. That's made 100 quid. Where was this? So we bought in at 186, stops at break even. Okay. It doesn't look like it's done much over the last week, which, given the week that markets have had, it's actually not too bad. Again, I suppose I did that trade as a bit of a bottom fishing trade. Arguably, that trade is still valid. An aggressive trade, be a buyer at 208 with a stop loss the other side of 170. 170 is the low. There's an awful lot of breaking news about the royal family at the moment, whether Harry and Meghan are getting invited to the Jubilee, and my phone keeps flashing. So for me, yeah, buyer with a stop the other side of the low would be, let's see, can it have a recovery from here? But if you didn't want to do it, I think plenty of reasons just to still be patient on that one. If you're in an uptrend for a long time and it reaches resistance, do you change your stop or get out to wait and see? I would change my stop. So if I was in a trade, I'm trying to think of one, where it was getting close to resistance, I'd make sure I had a tight take profit thing going on. I'm trying to see if there's any in here. But I wouldn't get out and wait and see it, because it might go just bursting through resistance. So yeah, I'd move the stop up. I can't think of anything at the moment that's doing that. But let's say for example, let's say you were short the S&P. If I was short the S&P now, and I know this low, these lows are important, I'd make sure I had a relatively tight take profit on my short in case the market suddenly blips up from here. So I wouldn't just jump out of it. But yeah, we looked at Bitcoin. Tesla, let's have a look at Tesla. I think Tesla's a bit boring, isn't it? It's gone a little bit boring, I think, Tesla. I think, let's have a look at it. I think it's, for me, it's still a buy. I think, I'd argue, even though it keeps flip-flopping around this uptrend line, I'd still rather be a buyer than a seller of Tesla. We were doing so well today as well, without any technical glitches. So for me, an aggressive buy would be a stop loss under the end of April low at 820. A slightly more relaxed buy would be a stop loss down here, which is a long way away, but arguably still up. But I don't think we're going to see 1200 anytime soon for these stocks. Can I buy a stock and hold it on Capital? Yeah, you can. We do have a stock trading part of the app as well as the leverage trading. So you can just buy and hold if you want to, and you don't have to do it on leverage. So you can do it however you want. And that's the end of it. I think we're gonna wrap things up there. Let's have a quick look at this Nasdaq. See how things are finishing off. I do think if you've got nothing better to do for the next 5.5 hours, apart from keeping up with the royal breaking news, I think the US stock market indices could be in for an interesting day. We've got a big up candle in the current hour. There's a lot of to and fro going on here. Let's see what happens. But we'll wrap things up there. So as usual, thanks for coming along. I do enjoy doing these and whizzing through all these different markets. It is all looking a bit gloomy out there. Let's see. To find out more about the company, go to Capital.com. To any questions, drop me an email, david.jones@capital.com. You can follow me on Twitter. I don't tweet that much, but at Jones the Markets on Twitter, and jonesthemarkets.com to find out more about me my trading approach. And an interesting week again next week, you know, with these whenever it is, these inflation numbers for the US coming out on Wednesday next week. I think it'd be interesting. Potentially lots more volatility next week. Let's see what happens. But have a good weekend. Good luck with your trading, and hopefully see you all next Friday. Okay, bye.